Good morning, one and all, and welcome to this morning's video. So this morning I have two pairs on watch, and those are West Texas Oil and SOYBN USD. Euro Kiwi, which I was looking at yesterday. We can just get that up. It sold off. It did exactly what I was anticipating. You can see here, feel free to watch yesterday's video. I said that when we got I was looking at this structure. Okay, I was looking at this structure here. And I said that when we had a corrective move into an impulsive middle section, usually, because it's usually the other way around, and we usually have an impulse correction continuation, okay, if the middle section is more impulsive than the move which has moved into it and moved out of it, then it's usually the case that we will get a three-touch structural approach like this, where the middle section within the three-touch structural approach is the more corrective move down. So we get more of an impulse correction continuation. We will usually get something like that, which lines up with the high of this structure and then sell off from there. And that's exactly what happened. Okay. Unfortunately, this we didn't get an entry on this because this we wicked to the area, not through it. And not just that, it was a wick. Okay, it was a wick on all time frames, including the 5 minute. These, if you're going to try and get an entry here, you will get tagged in and tagged out the majority of the time. Okay, normally you wouldn't get away with this. Okay, and there wasn't an entry even if you did take that. But so as has been happening for about a year and a half now, the pair sold off without giving me an entry. But it is what it is. I wouldn't be taking a trade down here because now you're poorly positioned. Okay, because you're trading into all these lows. So what I'd be doing is I'd be waiting for a break below here now and for some consolidation afterwards, and it would need to be proportionate to the move down which has preceded it, so that wouldn't be ready by the end of the day. We also got that parallel structure here. If you remember in one of, I think it was Monday's video, we had structures like that. Okay, I only use trend lines if I'm looking for a risk entry from the edge of structure, and because this is what I was looking for when I forecasted last night. I had the trend lines on the chart. I said in a previous video that we would likely break this low and push back up and get something more parallel. We did. We then tapped into there. As I said, that was just a volatility wick. And you can see that it was a volatility wick because if you switch to the line chart and you go to the 15-minute and you go to the 5-minute, it doesn't appear on any time frame. So don't get caught up into these, wicks, which are just news and volatility and not actually indicative of the sentiment of the market. We're trying to ascertain the sentiment of the market. And if we can't find that, then there's no trade there. And so there we go. It is what it is. West Texas Oil, the favorite of my pairs. So looking at this, I'm looking at this here on the daily chart. You can see that we've tapped into this area here. We had that high there with the sharp high. We had the sell-off, big sell-off there. We then had a little FOMO move here. So we have a sell-off. Okay, people think it's going without them, in quotation marks. And then it comes back out, washes all these people out, breaks just above the high, and then moves to the downside. We do get a bit of a sharp move up here. Okay, so because we've pulled back. Okay, we're not playing ball again. Right, there we go. So we pulled back about 70% of the move there. So already this pullback is making me think that at some point we may take out this high again. The other clue is that we've pulled back in terms of this overall move. We've pulled back about 75% almost of this move. Okay, so that's also given me a clue that at some point we may take out this high again. Okay, but you can see what we've done here. We have this consolidation here, okay, which caused a big run off to the downside. Okay, and initiated this break of this low here, and we tap just above there. We break just above, scoot back up for a mini, excuse me, a mini double top, and then we sell off with this little, and then we break, more importantly, we break this low here, okay? So we had the near miss to this low, which when price was here, could have been a clue that we were going up from there, but we didn't. We completely smashed through this low and we consolidated afterwards. So because we smashed through this low and consolidated afterwards, I'm seeing this as a potential impulse correction continuation to take us down to around this area. And the reason being is because if we measure this, we measure it from there, and we also measure it from the break, because as I've said previously, the volume that's been created within here can dictate how far we go. That would take us down to the sharpest of all of these lows here. Okay, and then maybe we then get a push back up to take out one of these highs or that high up there, and then we would have more of kind of that structure. Okay, so that's the theory. Because of how much we've pulled back of this overall move, maybe this is what's happening, but we can certainly capitalize on a move to the downside in the meantime. We also have, one thing I like is we also have this head and shoulders pattern here. So we have the left shoulder, head, right shoulder. We break the neckline. Okay, usually the right shoulder protrudes higher than the left, or equal. If it's higher than the left, that's also a good clue that we're moving to the downside. Okay, so that is that. If we just measure, that was about a 50% pullback as well. We just whipped through that. We can see here, if we measured this, that's about a, let's get the other tool on the chart. That pulls back about 38.2%, so that's nice. Okay, on the daily chart, you can see the consolidation there. And if you look here, you can see, what do we have? We have already, when I see this, okay, so we have this high here. This is where this consolidation started. The consolidation started here, which tells me that that's likely where it's not a sharp move, but it's where volume was built. It wasn't triggered, but it was built. So that tells me that the liquidity is likely sat there. The clue is that we near missed to it. Okay, one thing I've noticed, I used to take a lot of losses in this way, but when we have a move like that to start with, that is often a clue that we will get, not just tap into it like that, flag, and then go. Okay, what this price action here is a clue, it's a clue that we usually get something like that. We get a bit of a base, and then we push back up and get something like that, and then sell off. Okay, so what I was doing here, because of all that, I was looking for price to give us a bit more of a base, and you can see we've got a bit more of a base now. And by a base, I mean not something like something which gives us a bit of a flatter bottom. Okay, if we were to use trend lines. Okay, we've kind of got that now. You can see we've just tagged that one. We may push a little bit lower. We may push down to that low and then push up. I would actually prefer that, but once again, that wouldn't be ready by the end of the day. Okay, so what I'll be looking for, the questions I ask myself is, am I well positioned on the higher time frames for a move to the downside? If I was to take an entry around here, the answer is yes. Would I be well positioned on the lower time frames? The answer is yes. There's nothing set above that high is above that low, so that's all good, and it's more than 50% of the range away in any case. So if we measured that range there, that is more than 50% of the range away, but I'm not bothered about that anyway because it's sat above all of this. Okay, so what I'll be looking for from this pair is, I won't be looking for a risk entry from the edge of structure. Okay, so I won't be looking to get short with the risk entry here from the edge. Although we have, if you were to measure it, what's happened there? Okay, if we do have, if we were to line it up with trend lines, we would have something like that. But then you've also got when there's kind of, it's a little bit ambiguous and you've got multiple ways that you can draw the structure. So you could also draw it like that, and the third touch of the structure would be there. When it's a little bit ambiguous, and when we also have, just to touch on it, when we also have the sequence. So the next question after the positioning is the sequence. What was the sequence like? I forgot to mention that. This is not your most typical sequence. We kind of have the sequence, in my opinion, starts from here because we have the scoop double top. We tap into that. This is nice, but this is a bit of a sharp pullback. Okay, so the sequence isn't fantastic. We have a bit of a 70% pullback there. So this is not your typical sequence. And then even, let's just measure this. Okay, so that's not too bad. But this isn't the most typical looking sequence. So with that in mind, and the fact that there's multiple ways that you could plot trend lines here, okay, and also if we just measured this at this moment in time, if that was to give us an impulse correction continuation, that would also line up with that, okay? So because we could pop a little bit higher, what I'll be looking for is I'll be looking for a tap into this area of value, a push down on the 1 hour chart, and then I won't be looking for a 5 minute just because of that sequence and just because of the multiple ways that you could plot trend lines. I'll be specifically waiting for a minimum of a 2-touch 15-minute continuation, so 6 to 8 corrective 15-minute candles, and then I would look to get short either on the break, or if I could get the risk entry within it, and then I could manage it down to that low there, if that's where we were actually to reject, for about 4.5%. To the lows, we've got 6.4. Okay, and if we measure this impulse, as I said, that would take us down to, if we measure it there on the break, and then I would set what I would do is, if we just use the take profit, this is where I would set a take profit down there, and I would trail my stop loss, and then we would have something in the region of about 19% to work with. So that would be very nice. But again, the last year and a half or so, the market has provided almost nothing in terms of opportunities, certainly not ones that I've learned to see. But anyway, if it shapes up, great. If it doesn't, not bothered. So that is West Texas Oil. So I'm going to keep that on watch. There's the alert to see if we can push back up. If it doesn't trigger, then I won't be placing a trade. This one is a slightly higher risk position. Okay, so we have, if we zoom right out, we do have that near miss up there, although I'm not overly bothered about that because it's quite far away at the moment. But what we have here, this is where the structure starts to become quite nice. So we can, from this point on, we have this structure here. We break above, scoop double top, sell off. Okay, with this correction here, we sell off, we break this low, and then we start to get some really nice structure forming. So you can see here, okay, we have this high here on the weekly chart. What happens? We come back up, we near miss to it. So what we'll likely get is a bit of a FOMO move, and we can see the FOMO move there. We have a near miss to that low. That's also a tick in the box. We come back up, we break that high there, that near miss to that high, then we tap just above it and then push to the downside. Okay, so we have that kind of impulse correction continuation, and now potentially we're seeing a move down to here to take out this low that this low near missed too. Okay, and potentially on the higher degree we also have near misses down there, but to that low there, but I'm not really worried about that at this moment in time. Okay, so you can see there with the impulse up, break just above, and then we sell off. Okay, and we replicate once again. What's happened here? So you can see that move down there. We've kind of replicated that to some degree. So I asked myself, am I well positioned on the higher time frames for a move to the downside if I was to get short from this area? The answer is yes. If we just measure that as well from this move here, we have, that's a healthy pullback as well. So that's pulled back about 40% of the move. Am I positioned well on the lower time frames? Yes. That is about a bang on a 50% retracement. So that's a healthy correction. Is the sequence okay? Let's have a look at the sequence. Sequence of corrections. Yes, down from there, nice sequence of corrections. Notice that we do have this little consolidation sat just above. Okay, and that's about 61.8. So a little bit over what we would anticipate if we were going to push up. But regardless, we have this. When I saw this yesterday, the reason I didn't have this on watch, when you get a sharp move, when you get a steep pullback like that, okay, this is something I learned quite early on, but generally speaking, these don't play out to the downside. What they usually do, if they're steep, is they usually come back up, and then once again, we then tap into that high, and then we get more of a base like that. Okay, but once again, just as with Euro Aussie, notice the makeup of this structure. Okay, so if these are the lows of the structure, notice how, if this is the middle section here, we have an impulsive middle section, and we have a more corrective move into it. Okay, so I wouldn't be surprised if once again we have a little spike here. I wouldn't be surprised if we get something like that. This is like what I said with Euro Aussie. I wouldn't be surprised, because the middle section is more impulsive than the move into it, and at this, and potentially, we don't know yet, than the move out of it. We may get something like that with a structural approach. Okay, regardless, I still wouldn't take a risk entry from the edge of structure in this case, because we have this high sat just above, and if we measure it, okay, it's less than 50% of the range away. Okay, so we're about 30% there. So what could happen if you take an entry from this high here? Is you're tagged in, tagged out, price pushes up to there and then drops. So that makes this a higher risk position. Okay, so with that in mind, what I'll be looking for from this pair, I just realized I've rattled on for 16 minutes. What I'll be looking for is the following. I'll be looking for a little tap into that area. Because this is a higher risk position, I won't be looking for a trade on this unless another trade puts me in profit by 2% for the month. As I've said, none of my entries have shaped up this month. So unless something puts me in profit by 2% for the month, currently I'm at break even, then I would not take this trade in any case. But if that happened and this entry did shape up, then I would look for the tap in, push back down, 15-minute flag. When we've got a high sat just above, I don't take little 5-minute flags. I always wait for a 15-minute if there's a little inflection point sat above and we have a bit of a sharp move there, sharp sell-off, which broke this low. So there may be a bit of liquidity there. And if we get that, then although the stop loss looks a little bit strange, 10 pips is the minimum we go to, so that would be a 10 pip stop loss. I'd be able to manage it to that low, and then I would be targeting this low down here. Looking at this correction, we would likely have to build some volume along the way, because if we measure this, okay, so we've got that, we measure it from the break. Actually, that would take us down to here, which just so happens to line up with there. But given how clear this structure is, I would be targeting this low here, rather, okay, which is the near miss to all of this, and where I would anticipate price pulling back more deeply. And then I would measure from the range that the type flag was in, okay, and I would set, actually, yeah, if we measure the whole range, the 90% of that range once again falls bang on there. So that's why I've got one of the reasons I've got my target there. So I would literally set a take profit at that low, okay, and then I would trail my stop loss accordingly, and that would be just a little shorter term move down to there for around 7-8%. So that is the two pairs that I'm going to be looking for. As I say, you can forecast all you like, but it doesn't guarantee an entry. Okay, no matter how much you learned, no matter how patient you are, the market owes you nothing. So these you've seen, if you watch my videos regularly, that what I'm forecasting consistently plays out, but that doesn't mean it's going to give you an entry. Okay, so many people will thank me for making the money or blame me for losing the money, which always makes me laugh, because they'll take an entry that I didn't forecast. So how have I made you money or lost you money if what I was looking for didn't shape up? That tells me that all they've actually seen is, oh, okay, he said this pair's going short, I'm just going to get short. Well, that's not what I said. I said if this shapes up, then I will be getting short. There's a big difference. But hopefully you've taken some value from this. And of course, if an entry does ever shape up, then I will update you accordingly and bring you a recap of that trade. But for now, have a great day, and I'll speak to you again soon.